Hi there and welcome to the Property AI Report. My name is Mal McCallion. I am your host for this week's jaunt through the world of property and AI technology. And the intent here is to give you insights and actionable skills and tips that are going to help you to basically utilize the brand new technology that's coming along through AI, which is pretty awesome on so many levels. But also, I get it, yeah, a little bit scary sometimes as well. So we'll talk about that too. But the idea is that essentially you're going to be able to come away from this very quick, punchy 20 minutes or so with some really, really good ideas around how you in the property sector can utilize AI to basically win more instructions, to increase market share, cut costs, improve productivity, and increase revenue per transaction. So, there is a whole heap of stuff that this is able to do. So without any more preamble, let's get stuck into our regular slot all about property news. In this week's property news, the big story from last week is about self-employed agents. Now, regular listeners, viewers will know that we are quite interested here at the Property AI Report in the growth of the self-employed model. Now, stats out last week from 20CI tell us that this is a significant growth area in terms of essentially properties advertised and properties completed, growing 31% year on year. Now, that 31% sounds huge and it's pretty chunky, but it is actually only on a base of kind of 1.5, 1.8% of the overall market. So still small beer overall. However, this is not going to go away anytime soon. This seems to have become a kind of a hybrid, for want of a better phrase, a hybrid of the online model that was championed so unsuccessfully in the end by Purple Bricks and others, but that model, which still accounts for 5.2% of the market, let's be fair. Now, again, they were targeting, I think 3 or 4 years ago, 20% of the market. It is in decline. And again, these 20 CI stats demonstrate that this is an area of the market, online only, that is plummeting in terms of popularity. But it is now seeming that the self-employed model is becoming that growth engine, the actual part of the market that is changing how people are seeking to sell their properties and potentially let their properties. There are a number of different kind of economics in play, in my view. And one of them is very much about this idea that you can adopt a kind of working from home sort of mentality for estate agency. Now, I know very few, if any, estate agents, traditional estate agents, that allow their teams to work from home. It will not have gone unnoticed to the majority of you out there that working from home has become quite the thing since the pandemic, and a lot of businesses are now struggling, like serious kind of corporate businesses. Goldman Sachs are trying to get people back into the office, and many others, and that this desire for employees to have the flexibility of working from home, how that fits into their lifestyle, perhaps younger generations more particularly, and that kind of conflict with, even today, the ex-Asda chairman, Michael Rose, was out there saying that essentially we've gone back 20 years in terms of our productivity and our economy, just because working from home has become a thing that he and others want to prize us away from. So the self-employed model does actually lend itself to people who want that kind of flexibility, and that they're not going to get in traditional estate agency. And I think that's one of the key factors, particularly over recent times, that has spurred its growth. But obviously, I think as well, there are key setup costs that are absent from self-employed models that are present if you wished to set up a traditional estate agency on a high street. Obviously, the major one being the actual cost of your premises. So taking away that, also the fact that there are deals that have been done with the portals and with other advertising media, with CRM systems, with some of the other kind of fixed costs that come with running any business. Those are also offset by some of these self-employed models to a greater or lesser extent. There's also, a huge amount more of your commission that you can keep, etc. So it's providing a different way for agents to conduct themselves and to be in business, which obviously is having an attractive impact on some of the up and coming talents within the industry who are choosing not to work for corporates and for larger estate agents anymore. Instead, they go their own way and adopt some of these more flexible practices. Um, and I think it's going to continue. You look at some of the more established traditional estate agents that are looking now at employing hub models, the likes of Preston Baker, doing really well up in Yorkshire. You've got Richard James over in Swindon, Wiltshire, and their offshoot missions down in Brighton, and many others, that are adopting this, mayors, etc., that are now looking at this as being an important part of their kind of their offering to employees. Benjamin Stevens is another we were speaking with recently. So there are plenty of options now, and a really interesting, I think, mix. Again, opportunities in terms of flexibility and in terms of choice, I think is really, really interesting. So this is going to be something that continues to grow. The numbers are looking very strong. Obviously, you've got the likes of the XP that have come into the market and have made a big splash. You've got the likes of IAD from Europe. They've made less of a splash when they've come in, but are still present, and others that are certainly sniffing around. Kelly Williams perhaps are the ones that have made the least impact in the number of times that they've come and tried to get involved. But yeah, look, it is a very competitive space. I think it's going to be one that's going to be very interesting. More that spring to mind, the likes of Nested, etc. That they are aggressively chasing quality employees to represent their brand, as is Yopa at a different pricing level. So all of these will continue, I think, to just eat away, particularly at the online share of the market. Traditional estate agency is likely to continue to weather this for a while yet, I suspect. But yeah, it's going to be an interesting sort of few years, I think, from a structural perspective regarding how estate agents are going to be set up and who's going to be coming through the ranks, in terms of future the future talent and the future agencies and the future successes that are going to be present as we go into sort of through 2025, but also into 26 up to 2030. So yeah, going to be exciting to watch. There's some really, really good agents who are adopting this model right now, and that is going to be fascinating to see how they fare over the medium term. When they are, obviously generating a lot of revenue, keeping a lot more of their own revenues and their own commissions. And I think it's going to be particularly interesting to see how they fare against the franchises as well. So some of the high street franchises, your Martin and Co., your Hunters, etc., where essentially those guys have obviously got the premises to deal with, whereas these self-employed agents don't necessarily. So yeah, going to be watching it obviously with interest here at Pair, and we will be chatting about it pretty soon again, I'm sure, when the next big chunk of the market is taken by these self-employed agents. So that is our first story in the property news section. Secondarily, really interesting numbers from our old friends Rightmove in terms of how the market has started in 2025. So it is currently the 20th of January 2025. Stats out this morning from Rightmove states that the number of new homes that come on the market are 11% higher than it was a year ago. All right, so 11% higher in 25 than it was in 20, despite there's some uncertainty over interest rates. And one of the kind of the takeouts or the kind of PR that came through with this was that actually there's uncertainty over stamp duty, and that this kind of bulking out has been in spite of that in the stamp duty uncertainty in air quotes here. I would suspect that actually the fact that stamp duty is going to change again at the end of March has actually driven this 11% or part of the 11% increase. I think that people are encouraged and have been encouraged to put their property in the market to try and get a sale before the end of March. That is not going to be possible if you put your property in the market right now because it takes too long to sell. But people who thought, putting it on in Boxing Day for that big rush and then at the turn of the year as well, are obviously racing and hoping that they may be able to get their sales done in that time. Apparently there's been some toppy numbers in terms of the prices requested by vendors. Again, if they really wanted to sell before that stamp duty deadline, then it's unlikely that they're going to do so with higher prices or higher asking prices at the outset. But look, I think it does speak to almost a kind of latent positivity, that there is so much negativity around. There are so many headlines in newspapers all about how terrible things are, whether it's, Trump over in the States getting inaugurated today, or it's, that the UK government is absolutely terrible, and the whole country is going to hell in a handcart. But it seems that actually people, and the property market is always a good bellwether, seem to be reasonably positive in spite of all of this. Interest rates, there's talk of at least two, possibly four cuts this year. We are kind of coming out of a reasonably flat period, and the cycles exist, and potentially there is going to be more optimism and more transactions done this year. I think it's Rightmove have increased their estimates of the number of transactions to 1.15 million. So there's a lot to be potentially cheerful about. Not that you would know if you were to read any of our lovely newspapers or headlines on the media right now. So yeah, look, I think 2025 is shaping up to be reasonable to good. So we'll keep our fingers crossed, and obviously pay attention to how it all shakes down after the stamp duty situation comes to a head at the end of March. There'll be a bit clearer with a lack of regulatory, sorry, kind of a lack of governmental impact, let's call it, should dissipate, and that should mean that the rest of the year we'll see a more natural market. But yeah, look, I think yeah, I listened to a presentation by the epic Roger Martin Fagg, who is a behavioral economist and a bit of a genius, and has called most of the economic trends over the last few years. He was at the RAND conference at the end of last year, and he was unbelievably bullish in terms of how positive things were going to be this year. And he actually said, prepare for a boom. So, we started the year. There seems to be indicators that he may not be misplaced in his confidence, and we'll take that and we'll believe that, and see how far we can go. So yeah, plenty of potential excitement out there. So looking forward to seeing how the year pans out from that perspective. The third story in our property news this week is again another kind of broad macroeconomic conversation. This is about mortgage lending rules. Now, the government has indicated that it may loosen these mortgage lending rules to enable more people to get on the housing ladder. It's interesting that this Labour government is following hard in the footsteps of 14 years of Conservatives, where essentially it is looking to make sure that the housing market is happy and people are happy buying properties and so on, because they know that confidence filters through into the economy. They know that if they're going to hit their growth targets, then the housing market has to be a happy place for people to participate. So relaxing the lending rules is obviously great for the industry. It will bump prices. There are costs to it that will have to be paid at some stage. But one of the quotes that amused me this morning when this came out was Charles Rowe, director of mortgages at UK Finance, which people may know is a lobby group for 300 financial organisations out there here in the UK. And he said his first line was, banks will always lend responsibly, he said, before going on to say things about how they always need this extra kind of support from government. But the fact that the banks have not always lended responsibly just kind of instantly sprung to mind, going back to obviously the global financial crash of 2008. But yes, let's take Charles Rowe at his word and insistence that if banks are always going to continue to lend responsibly, then a relaxation of the rules cannot be anything other than a good thing. So yeah, looking forward to seeing how that starts to filter through into the market. I think it is going to, yeah, if it comes true, and again, these are soundings and rumblings from the heart of government that are essentially just seeing how it lands and whether it gets support. Assuming it does come to pass, then yeah, that and some interest rate decreases spell good news for the market. And hopefully, again, this means that 2025 is going to be a bit of a bumper year for the market and for those participating in it. So yes, exciting times. We will come back to this again, I'm sure, very soon. That's our property news section for this week. Let's tuck into some AI and technology news. So our first story here in AI news is about our, yes, kind of good friend and somebody who has got a lot to say on AI, Sam Altman of OpenAI. Now, he has obviously led the business OpenAI that first launched ChatGPT 3.5, that essentially blew the doors off of the recent generative AI boom back in November 2022. So just 2 years after and a bit after he launched that and changed everything, he's put together a bit of a manifesto as we head into 2025. And particularly, he has told us in no uncertain terms that he at OpenAI and his colleagues know how to build AGI in 2025. So AGI, just a reminder, is artificial general intelligence, which is when essentially the machines are able to do things at the same kind of level as humans, if not better than most. So, they think that they are going to be able to produce AI that can do a lot of what we do, if not most of what we do, by the end of this year. Now, that's not to say that it's going to come into practice and it's not going to be actually out there and able to be used. But obviously, for us at Model Prop AI and for others participating in this space, it's a really exciting statement, although obviously one to be taken with not just a pinch of salt, because it's Sam Altman and he said loads of stuff, but also with a certain degree of responsibility and care in terms of, well, what does that mean for everybody? In terms of jobs, in terms of people's ability to ensure that this is aligned with our needs and what humans actually want, rather than what AI and the machines are desired to do. So I think that that there is a lot of work, and I always talk about how important it is to remember that this alignment, as they call it, so the ensuring that AI is doing what we humans want it to do rather than it perhaps would like to do. I think that is really, really important. That there is a huge amount of work with what they call alignment with AI, but also the power of what it can do and how it can help productivity wise. It's one of those kind of things that everybody says. Software engineers, for example, were not a thing back in the 50s and 60s and even most of the 70s, but it became a job title that we learn that we have as part of our degree courses these days. It is a well-respected job. It is a very high-paid job, and with AI, things like AI engineers, the ability for humans to manage all of these AIs as they come into the workforce. And another thing that Sam Altman said was that by the end of the year, there will be agentic AI in the workforce, materially changing the output of companies. Right, so that's pretty huge. And again, we at Model Prop are across this, are helping dozens and dozens of agents to utilize AI right now, from voice AI to images to videos to text. All of this is now already making a difference to property professionals, to estate and lettings agents out there. And what we see when we look into the future for this year is a lot more productivity gains. And in a world where, or in an economy where, recruitment is hard and getting the right talent is hard, and then ensuring that talent is as productive as it possibly can be, that's hard. Then enabling AI to perform some of these tasks can make a real difference to these organizations. Now, again, we always talk here about getting machines to do the machine jobs and humans to do the human jobs. Property is a people game. It always has been. Relationships are absolutely critical. So the more we can get your teams out into the world and meeting people face to face and talking to people one-to-one and one-to groups, that's what humans are great at, and that's what they should be doing. They shouldn't be sitting behind screens and just tapping away, because that's what machines can do. So, I think that this statement from Sam Altman is a really powerful indicator of where this is all going and how quickly it is all going. And I think it's going to be something that through the rest of this year, quite astonishing leaps are going to be made. And again, we're going to be here to navigate it, to demystify it, to keep it trustworthy and keep it ethical and safe. And that is our core mission. That is everything we're about. So yeah, look, lots to go on. Very exciting, but we'll keep you posted on what it all means here in the Property AI report. If you subscribe to our Property AI report newsletter as well, that comes out every week. So yeah, loads that we will keep you informed of. So do keep in touch. Any questions you've got, of course, just let us know. Pop onto modelprop.ai. We're all there. Okay, so that is the first of our AI news in Sam Altman's reflections. The next thing we want to talk about this week is about Meta's AI tool that speaks other languages. Okay, so essentially, it's called Seamless AI, and all you do is talk in your language, and it will translate it in your voice into another language that you desire it to. Perhaps the really neat thing from Meta on this is that they've got these Ray-Bans, which you may have come across before, that are that have AI in them. So essentially, it's going to be fitted into there, and you're essentially going to be able to talk, and it will then translate it for you and talk to anybody in a different language. Now, the ramifications of this are pretty significant. It was publicized as being akin to, I don't know if you've read The Hitchhiker's Guide to the Galaxy. It is, which is really funny and brilliant. Douglas Adams. If you haven't, then please do. But they had a particular piece. It's science fiction and it's comedy science fiction. And basically, one of the things they had was a Babel fish, where basically you swallowed this little fish and it enabled you to speak in any language or anybody to understand you in whatever language was theirs. And I think it was the Vogons particularly were the ones that it first of all was able to translate in their epically horrible poetry. Anyway, digressing slightly, this seamless AI from Meta will allow you to do pretty much the same thing, where essentially whatever you say, it will be translated and the other person will be able to understand you in whatever language you are speaking, potentially including Vogon. That means, I mean, I've got sons who are doing exams right now in French, Spanish, German, and they probably aren't going to need to, right? Go forwards a few years and and perhaps even French are not going to have to do English because it's going to be easy to understand. So yeah, I mean it's going to change everything, and this is what I mean about AI. Like suddenly there are things that are coming out of the woodwork that you're just thinking, well, that really does change everything, and it's so helpful. And I've been to places recently where I was over in Rome. I've been over to Japan, Tokyo, and the ability to use AI at this point, it was all about just being able to translate things on your phone just using Google Lens, which was amazing itself, just like from text. But to be able to just like talk and then for somebody in that language to understand you is going to be huge. So yeah, super exciting, very, very different, and just a kind of marker in terms of how we need to be thinking about what is going to change in our world in the coming years. Because yeah, everything's up for grabs, and if we can do complex things such as instant translations on the fly, then there's going to be a whole heap of other things that are going to suddenly come into play that are going to change not just how we go about lives, but also our education system and various other things that we take pretty much for granted right now. Okay, final on our technology and AI report this week. Wanted to just very quickly cover basically that YouTubers are selling their unused video footage to AI companies. All right, so if you have any videos that you've kind of teed up and then kind of looked at and thought, that's probably not right for now, they can be property videos, they could be anything, right? If it's up on YouTube already, it's probably been taken and used in some AI businesses already, I'm afraid. Sorry about that, particularly Gemini from Google, but also surreptitiously and unacknowledged as yet, a lot of the other video companies such as OpenAI's Sora. But if you've got anything that's not made it up yet, then people like Google are buying it, right, for between $1 and $4 per video. So, those properties that maybe didn't quite make it to market, anything that you've done about local areas, anything you've done about your teams, right? Anything potentially per minute is $1 to $4 per minute. Yeah, it could be really, it could be quite lucrative depending on how many you've got. And perhaps it might be a nice little sideline going forwards. If you are making things and making a number of the versions of videos, perhaps just stash a couple away and then, see who you can sell it to. But yeah, it's something that every one of these AI businesses just wants something unique. All right, they want proprietary data that nobody else has. So, again, anything that you've got that you think they may be able to buy, I'd go and start like basically selling it, seeing who the highest bidder is, and seeing if you can't make a little bit of extra money on the side. All right, that's our serious news for now, our property news, our AI news, and our technology news. Just wanted to drop into, as we like to do every week, a tool of the week. All right, so this week wanted to just showcase something called KEAK. okay, which is easy for me to say, KEAK. This essentially is looking at how you can increase your website's impact. Okay, so it says that all you need to do is basically go on, you can introduce it to your web designer or your web kind of the way that you build your website. It's got landing pages. What it does is it goes through your whole website and tells you what works, what doesn't. It allows you to A/B test loads of different things. So headlines that you've got on your website, all this stuff that could potentially be a difference between attracting leads and not attracting leads. So it's just a really interesting way of using AI to go through your website and understand more about what works, what doesn't work, and how it can draw in more leads and then kind of convert them into emails to you and get them understanding what you're about and choosing you above your competitors. So it's called KEAK, KEAK.com. Go and have a look, and it can potentially really improve the impact of your website. And we're road testing it here at Model Prop as well. So I'll let you know how that goes too. So that was our tool of the week. Just a final one on our occasional service around weird AI of the week. All right, so this week's weird AI of the week, and it's quite a sad story, although also a kind of cautionary tale too. So a woman over in France handed over 800,000 euros to somebody that she thought was Brad Pitt. All right, now obviously there's some issues potentially around how she could come to believe that in the first place, and perhaps not necessarily being entirely focused on the risks here. But she actually left her husband for this fake Brad Pitt, as well as giving 830,000 euros. But yes, some of the pictures you can see, and if you go onto some of the newspapers and search for, yes, this fake Brad Pitt story, she basically over a period of a couple of years was hoodwinked by a number of AI images, it seems, not even necessarily videos, where they'd stuck Brad Pitt's face onto somebody who was in hospital and basically convinced her that he was having cancer and that he needed all this money from her. So yeah, be careful out there, right? If Brad Pitt does come calling and you think that they're not necessarily falling in love with you and wanting you to share all of your cash with them for honest reasons, then please don't give them the money, because it's unlikely to be true. I think, if you were to put a percentage on it, it's a very small percentage chance that it is actually true. But yes, so for weirdness, this is right up there. Yes, somebody actually giving away almost their entire money to somebody scamming them, pretending to be Brad Pitt with cancer. So yeah, that's our weird AI of the week, and also our cautionary tale of the week. Okay, so that is it for this week. Thanks so much for listening in. Hope you have got yet more good insights into what's happening in the world of property and AI. I'm your host, Mal McCallion. I'll be back next week with even more from our property and AI news stories. Until then, have a great week. Good luck out there, and I will see you soon. All the best. Take care. Bye-bye.